Let's chat commodities now, where you have seen a good rebound coming in, especially for the base metal prices. On LME, you have seen 1 to 2% of a run-up. The Chinese data has been on the positive side, and in the recent days, it has been good rebound that has been seen in case of iron ore and steel prices as well. Let's get in then. Sebastian Lewis, who's editorial director, Steel with Platts China. Sebastian, hi. Thank you so much for joining us. What's your sense really coming in for the steel demand, the global steel demand that is?
Well, I think global demand's not been bad. We've seen a lot of positive news coming out of all regions. But you've got to remember, when we're talking about steel, China is half the world's steel production. And really, it's all about China when it comes to price of iron ore. And of course, that feeds through to steel prices. And I think when we look at China, last year, China's story wasn't that good due to real estate. Real estate sales weren't strong. The government was trying to really keep a cap on those house prices. This year, we've seen rising house prices, rising sales of real estate. And that's really, over the last few months, really seen demand pick up for Chinese steel, and of course that's fed through to prices.
What's your sense, Sebastian, for the rest of 2013 now, the second half of 2013? Do you see demand gaining up? How would you see this year end?
Well, in China especially, I mean, and again, I'm always referring back to China because it is the big, 100-pound gorilla in the room. You tend to see production tail off a little bit in third and fourth quarter. That said, the government, I don't think, was so encouraged by those quite weak GDP numbers in the first and second quarters. And it's engaged in a bit of what they call policy fine-tuning, really adjusting policy, putting a bit of money here and there to make sure they support the economy. And I think that could see production be a lot stronger, actually, than the bears might expect into third and fourth quarters. Although overall, you tend to find the first half of the year is the stronger year for Chinese steel.
Sebastian, well, having talked about China, what's your sense coming in for India as well? Because most of the metal stocks in India have seen a strong run-up coming in. Would you say that the period of upturn has started? Perhaps the Indian metal space has seen a bottom?
Well, I think when it comes to India, okay, domestic demand may not be so strong, but I think you've got to look at the depreciation of the currency. And of course, that does favour exporters. Indian steel mills, the good, well-integrated ones, have their own captive iron ore. They have access to their own iron ore. You don't have to import it like the Chinese do. And of course, you've got your own iron ore, that's all priced in the domestic currency. When you're exporting, it's priced in dollars, and that really should favour exports for Indian producers. So I can see why that might be a bit more bullish, be a bit more a bullish signal for the larger producers.
Sebastian, how would you look at the Indian markets in that sense? Is it the base metal prices, the steel or iron ore? Where do you see an industry rebound coming here?
I think it's difficult to say in terms of industrial rebound in India. Look, I think, the macroeconomic situation is not as good as it has been in previous years. That said, from a steel point of view, India has always been structurally undersupplied. Big steel companies like POSCO and ArcelorMittal are not going ahead with their projects. And I think that's always supported the Indian steel industry. The demand over the longer term has always been higher than actual supply that we've been able to put on in the country.
Well, we have seen an underperformance coming in for most of metals in 2013. Going forward, what's your sense? Are you bullish on metals, bearish? And how would you really categorize into ferrous and non-ferrous metals in that as well?
I think it's difficult to say. I mean, look, non-ferrous metals are not really something I cover a huge amount. In terms of the ferrous sector, I think you've got to start looking at margins. Iron ore, we're going to be seeing a lot more iron ore come onto the market in the second half of this year and next year. And from a kind of supply-demand fundamental, that would suggest that prices for iron ore will go down. If you can see a bit of rise in demand for the end product steel, that should see margins improving for steel makers.
Sebastian, final question.
So
I know you do not come out with prices. Sebastian, I know you do not give price views here, but what's your sense going forward into this industry now? I mean, we have seen good data coming from China, from Europe as well. The US also has come out with good data. The Indian demand, as you said, has been undervalued at this point in time. So going forward, what's your sense in demand and prices?
Well, I think from a point of, Platts don't forecast steel prices. That said, and we don't forecast price of commodities at all, but that said, from a personal point of view, I think I would expect to see iron ore prices going down in the future as more supply comes online, and if we see a reasonable demand situation from steel, we might expect steel prices to rise a little bit.
All right, Sebastian, we'll let you go at that. Thank you so much for joining us. So that's the view really coming in for flats on metals. The iron ore prices could decline. The steel demand, of course, has been good. And as far as India stands, well, we have seen some value starting creating into that space at least. Well, Kirit Somaiya has filed a PIL against Ministry of Consumer Affairs, NSCL, and its promoters, Jignesh Shah, saying clearly that the government departments were in the know of happening of NSCL. He also raises questions on top brokers who sold the product to their clients worth 5,000 crores plus.
It is a connivance of the government officials, in a way Sharad Pawar, the minister himself, Jignesh Shah, the promoters of NSCL, and the dirty dozen corporates. The top 4 brokers, I have told them, okay, you are such a brilliant chartered accountant. You know much more than me. If I can do so much research in just 1 month, the meaning that you were knowing all these things. So in a way, you allowed not only illegal transaction, but you encourage your small investors.
Let's take a look at the commodity prices as well, where we have seen choppy moves coming in. Let's also get in Biren Vakil. He's commodity consultant, Paradigm Commodities. He joins us live on the show. Biren, hi, welcome. While we have seen profit taking in energy and precious metals, the base metal prices really have turned around on back of those Chinese data.
Chinese manufacturing seems to be stabilizing, but more good news is coming out from Brazil, where economy has posted 3.3 GDP growth in annualized basis, and market withstanding monetary tightening because Selic rate is now 9%. Mexico is also doing well, so I think we may see a rebound in third quarter, maybe fourth quarter. We may see decent gains in metal pack.
So, Biren, from here on in the base metal space, how much more of an uptick are you expecting?
I think I'm a little bit bullish on copper, especially more bullish on lead because of supply constraint and global rebound on auto sector. Inventory overhang in aluminium, it seems it would continue to be laggard and may underperform. It would fail to join the rally, I think.
Biren, how are you looking at the edible oil space? Because last week when we were talking, you were bullish, and we have seen those levels as well come into the market. Do you think this is a time when you could start going short in this space?
It is too early to say because one depression is coming in Bay of Bengal, so weather would be the key for next week. But if I found a good dips somewhere between 685, 80, I would be interested to go long in soya oil or especially CPO. CPO looks attractive because of supply shortages.
Biren, what's your sense coming in for cotton as well? While the monsoons have been good, we've seen this commodity continue to gain on the higher side. I mean, there was a lot of profit taking in the first half of 2013, but from here on, how would you want to take it?
It's a fight between two forces, tight inventory versus new impending large crop. But my take would be to go for demand side bulls for a near term. I would prefer to be long in October contract, 22,300. Stop loss would be 22,000 and upside objective is 23,000.
All right, Biren, appreciate you joining us. Those are the views coming in from Paradigm then. They are buyers into CPO, into other agro commodities as well. And base metals is a space where they think more upside can be seen.